The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night. And stay warm out there, folks, because we got a nice cold spell coming across this great country of ours. This quote is by Beatrice Potter. Believe there is a great power silently working all things for good. Behave yourself and never mind the rest. Market-wise, let's take a look at it out here. We have the Dow Industrials up 302, NASDAQ up 85, S&P's up 36, gold contract down $2.90, traded $1,207 an ounce. Silver down 19 cents at $16.35 an ounce. Copper up a penny at $2.76 a pound. Light sweet crude flat at $48.72 a barrel. The oil market just can't get any traction, folks. Bonds, you have the 10-year down 11 ticks, 128.04. The 30-year is off 1.9 ticks at 146.29, both with light volume. King dollar is up 480 ticks at 92.59. King dollar tested in its testing its 2005 highs as we're speaking right now. Euro down 55 at 117.85, and the yen is trading up 42 at 119.67. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll start off, folks, with the future. So what do you have out here today? Okay. We're going to have light volume. You absolutely have wide price spread. There's no two ways about that. You know, we're at 2055 right now on the E-mini. If we take a look at this intraday, what you're going to see is this. Intraday, we just busted out into the highs. What we've had, however, though, is this. So watch this shake out. So we had an hour into the close out here, and this is going to be tough for this market to sell off at all. The reason being, folks, is that what we did have is that you had Europe close up 2.5 to 3.5%. Guess what? That's what bear markets are made out of, folks. Bear markets are made out of fast counter-trend moves with light volume. That being said, right now our own S&Ps are up 1.8. You get the Dow up 1.7. In fact, there's not a Dow stock that is red right now. NASDAQ is up 1.8. Okay, that being said, when we take a look at the E-minis, this is what you had. Your first sell down after the this morning was at 1210. 1210, the E-mini got into a price point of 2048. You were coming into a high volume swing on the way up, so bottom line, you get the bounce. We get the bounce up to 2053, and at I bet it was 145. Yeah, no, $1,400, 2 o'clock. At 2 o'clock, you get the second sell down. Now, after that, you spiked higher. We got up to the 2058. And what I expect you're going to see now is this. Right now, we're at the 2055. And it's going to get interesting to see whether it can actually get down into the 2043 level, which is coming into that close. That would be hard to do today, particularly because you had the Europe closed so high, and Europe closed at its highs. It closed running into its highs. But what we have right now is that, and we'll be able to tell when we first come into this first lower swing point at 2050. Bottom line is that, you know, we'll see how this shakes out coming into the close. Gold market. What do we have with gold out here? What you have with gold is this. With the dollar at highs, gold still refuses to back off. This is pretty amazing, actually. And this is what you have. We take a look at this gold market. The high from 2 days ago was 12.23. Right now, you're trading at 12.07. We've done this today and with 117,000 contracts. That 117,000 is coming into 132,000 contracts. It's coming into 141,000 contracts. So you're going into those lower levels with lighter volume. In a big way, too, not in a small way. What I do expect you're still going to see out here is that we're going to see gold and the actual equities at higher price. Now, let's get over to King Dollar, because King Dollar, folks, is what the market is all about. King Dollar out here today has hit its 2005 highs. King Dollar right now is trading out at 92.58. Now, what you have is this. The 2005 highs. I'm going to bring this back for you for a second, and we take a look at this. So I'm going to bring this back, and I got to bring this back on. We got to get back quite a way. Oh, actually, I got to bring this on. Yeah. Well, first off, first we're going to do this intraday. So intraday, what we have out here inside this index goes like this. This morning we hit the 92.76 area, and the benchmark on this, folks, by the way, is 92.53. You hit that benchmark this morning with basically zero volume. We came back up when the markets were really liquid at 8:20. We hit 92.62, and right now you're at 92.58. And what does happen with the index itself is that even coming into this close, it's basically slightly illiquid. So we'll see if, in fact, that index can close over the 92.53 area. That's the crucial area. We get into the small caps. We take a look at the IWM. And what you're going to see at the IWM is this. The IWM has the most anemic volume of all the indices out here today. We take a look at this on the daily basis, and what you're going to see is this. Thus far, when we came down to the IWM, you came down with 67 million shares. Thus far, on the way up today, we've done 22 million. So the IWM will do about, let's say, about 26 million. And the number on the IWM goes like this. A close under 118.71 would be a failure. That's how this thing shakes out. So we'll see how this whole thing's going to come out. But the IWM, the Russell 2000, had come down in big volume. You know, we came off that high of 120, 138. That high was generated on the 29th. We get down to the price point of 114. And, you know, this bounce today is basically saying quite a bit. We go take a look at the SPY, the SPY. What you're going to see inside the SPY is this. SPY today has done, let's see, we're at 108 million shares. That's after coming downtown with 209 million. The SPY, however, is holding price. So we'll see what comes down on the price side with the SPY. The SPY has not sold off yet. Whereas, well, actually, let's take a look at this intraday for a second, because what you're going to see is that the future S&P did sell off. And the way the SPY set up, there's some divergence there. That's interesting. So the difference, the divergence inside the SPY is that at 2015, you actually had volume, and then the next bar had lighter volume. Go back to the, I want to go back to the future for a second, because coming into this close is going to be crucial, folks, because what does happen is that if you don't need a huge sell-off coming into this close if you're a bear out there. What you need is about 10 points. And we'll see whether we get that or they basically bust that baby higher. Oil market. What do we have inside oil? Oil, folks, okay, continues to struggle in a huge way, not in a small way. The oil market out here, there she is. Oil market out here right now, light sweet crude is trading out at 48.71. That level we hit early this morning. We hit the 47.73, and the way this crude is continued to be set up is that this baby wants lower price in an incredible way. The crude market today, folks, basically has volume. So what you have is this. We've done 460,000 contracts thus far in the crude market, and it hasn't been able to move the needle. What that sets up is that's going to set up, we have a daily high volume low right now. What you're going to end up with is that you're going to end up with a weekly high volume low. We're dealing with Thursday already. That's a big number, folks. So you're pushing lower with higher volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down, up 311. You get NASDAQ up 86. S&Ps are up 39. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So you get the Dow Industrials right now up 324, NASDAQ up 89, S&P's up 38. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy has an outstanding show, 5 to 6 Eastern Standard Time, and all the programming at TFNN, of course, you get right on your cell phone, tfnn.mobi. We start live programming every trading day, 8 a.m., 8 to 6. If you want to get Tiger TV, just go to tfnn.com, hit the TV on the top right-hand corner. You get the audio, plus you get the video. Andy Heck, what's going on?
Hiya, Tom. How are you today?
You staying warm? How cold is it out there?
Oh, it's nice. It's like 65 degrees.
Oh, so the cold front already went through you. See, we have it this morning.
You had it this morning?
We woke up, well, so we still have. We woke up, it was 40 degrees. It's only like 47 out right now.
Oh, no, it's beautiful here. I mean, thank God. It's all going to Green Bay and to
in Boston. Boston was -2. My daughter had sent me a picture of the thermometer this morning, -2. And, folks, that doesn't happen in Boston. If it's -2 real degrees, it's probably like -15 wind chill. So.
Oh, yeah. I could imagine what it's like in Vermont. It's probably -25 up there. Wow.
Killington, Mount Killington. Get up there and go some skiing. Totally.
Brutal. Yeah, that's where I'm going next week. But I'm going to Utah where it's nice and warm.
Cool.
Yeah. So, hey, listen, the dollar. Let's talk about the dollar. I put the chart up here. Couple of things. First of all, the settlement price is in for the dollar index today. It's 92.602 on the settlement.
Right.
So that's, closing above
it's over, yeah. Right.
Yeah, the November 2005 highs. But the interesting thing, and the reason that I think it keeps going, Tom, is I have a chart up here.
Okay.
And if you notice, the lowest thing on the chart here is historical volatility.
Yeah.
Now, this dollar has exploded. Historical volatility is at 4.86%.
Okay.
That is very, very low. So the rally has been slow and steady.
Yeah, it has.
And that's a positive. That's kind of a. It's not like we've had some crazy spikes or anything like that.
Right.
And I'm sure, as we talked about on Tuesday, the central banks are standing there in case there are any crazy spikes in the dollar to intervene. But this has been slow and steady, a couple of points a day. Started on May 4th. We were below 80 on May 4th.
I know, man. Listen, it's been, well, what it has, it's been slow and steady, folks, since 2009. Really, that's the reality.
Yes. But hey, it looks good. Gold is hanging in there, man. So is silver. I mean, the precious metals are hanging in there nicely, certainly. Now, the other thing I wanted to mention to you today is my ex-boss, Mr. Andy Hall.
Yes.
He made a comment yesterday.
Okay.
And he said that oil, the bottom is $40.
Interesting.
Yeah. I mean, I know the charts are saying lower, and a lot of people are saying lower. Andy's good. He is good.
Oh, listen, there's no. I'm not. Hey, we'll find out what happens, man.
We will find out what happens.
The bottom line is that when you're a large trader like that, folks, the bottom line goes like this. If he's saying $40, he's going to be protected down at 25, right?
Right.
I mean,
exactly.
that's the reality, okay?
Oh, exactly.
Because when you pile into a position, folks, okay, what ends up happening, I suspect what he's doing is he's piling into a position for a longer period of time. And if you're doing that, you know that you have to save enough bread inside your pocket to push it that much lower when your macro position is saying it's going to be that much higher.
Absolutely. And you know what, Tom? I know the trade he's doing now. He's buying the front and selling the back.
Okay.
That's what he's doing, because that is the trade that is made for him. Back in 1991, when Saddam Hussein invaded Kuwait, oil was about $20 a barrel.
Okay.
And I was working with Andy back in those days, and he had a massive, because of the term structure, because of the big contango in oil at $20.
Yeah.
He was long the front, up the wazoo, and short the back. And when Saddam went into Kuwait, oil doubled overnight. It went from $20 to $40.
Yeah.
And the far forward oil went from $20 to $19.
I know, that's crazy.
So he made on both sides of the spread.
So let's walk through this trade again, what you think he is. You think he's long the front again and short the back?
Well, I think he's been piecing into buying nearby oil, and selling, 2-year forward at a $13 contango.
Yeah, because
at 13%.
Right, because what's happening, folks, is going forward really has not come down as much as the near term. And in fact, it's down a little bit more now, but it wasn't even a week and a half ago, right? I mean, a week and a half. Yeah, right.
Right, and that's the thing to watch, Tom. I mean, that's the thing. There are two things to watch here for a bottom in oil, in my opinion.
Yeah.
Number one is when those term spreads start to narrow.
Okay.
That'll be first clue. The other thing is when the crack spreads start to pop up, indicating more demand for things like gasoline. So, these are the things we have to keep our eyes on. You remember back in June, I was talking about how we were starting to see the term structure move from big backwardation, and it was narrowing now. It was a widening, rather. It was moving towards contango, and that was kind of a signal that crude oil was going down.
Okay.
Well, now we have to look at it, for a bottom. We have to see where this contango stops widening.
Yeah, no.
So we got to keep our eyes on that one. And I think, look, for him, it's a no-brainer trade. All he has to do is buy it, store it, sell it forward, and he's guaranteed a profit on that trade. All right, and then he can deliver it back on the exchange because he's selling forward. And if he's doing all that at 8%, selling forward at 13%, he has a locked-in 5%. But he has a free call option if the spread narrows. Then he can make a fortune like he did back in '91.
Right. No, I'm with you.
He made $450 million in 3 hours.
Oh my God, that's sick.
Yeah, well,
that's a good day at the office, man.
It's a good decade at the office.
Yeah, it's a good decade at the office.
Most traders.
No doubt.
But so very interesting. A couple of other things going on in the commodity world. Coffee seems to be percolating again. Coffee got down to about 160 at the end of the year. There is some damage in Brazil to the coffee shrubs, and we've seen it move about 18 cents higher. There's a big gap on the charts up here at around 210 in coffee. Yeah. So coffee's looking good. I mean, I'm looking at commodities with fundamentals here. Cocoa also looking pretty good. They had a nice move up today. It got over 3,000 for a while, up about $70 a ton today. So that had a nice performance today. Very interesting here. Very interesting. You got to look in the commodities world here. We have to look at the fundamentals. Copper, I'm not too thrilled about still. I mean, we're bouncing about a penny or so today, but it feels like a very much of a dead cat bounce to me. And I think that the higher dollar will particularly affect base metal markets.
Well, let's go into these markets for a second, the metals market, because what's interesting is that the dollar, of course, is at highs. Gold hasn't got whacked. What they just did in the last hour and a half, folks, they did whack the gold equities, however. And I can tell you from the experience of the past, I actually like how they whacked these equities today, because it's like it's almost too suspect. It's like, oh, really? Gold is still up there, and they're at swing points, and so that's saying that, yeah, you're gonna get a small pullback here. But it's going to get intriguing watching this shake out. Can you stay with us a second?
Absolutely. I want to talk about nat gas.
Okay, nat gas. Okay. You stay right there. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Don't forget, Andy's coming up right after my show, 5 to 6 Eastern Standard Time tonight. Get it right on your cell phone. TFNN.mobi. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials up by 306, Nasdaq's up 85, S&Ps are up 36. We're talking with our man, Mr. Andy Hecht. And don't forget, right after my show, 5 Eastern Standard Time tonight, 5 to 6, Andy's going to be out here growling and prowling with you. He also has an outstanding newsletter, folks. The way you can get that, you come over to our website at TFNN. You go to newsletters, go to trading newsletters. You see the Techno-Mental Commodity Report right there. You can test drive it. 30 days, absolutely free. Let's talk natural gas.
Natural gas. All right. So the EIA released figures today, down 131 billion cubic feet. We're 8% above last year, 2% below the 5-year average. Natural gas is up 6.4 cents, but very interesting. I have a weekly chart up here, Tom.
Okay.
And if you notice, where I'm pointing right here, last year, during the first week of January, natural gas prices kind of put in the lows and then proceeded to rally, making highs in February. Now, right now, I'll switch to a daily chart. You know, the market doesn't look great here. I mean, but we are doing some bottoming action here around 280. There's a nice little gap on the charts up at around 335 or so, 340. I think it has a potential. I mean, it's cold out there. You know, it's being dragged, obviously, with the rest of this energy sector, too. So, you know, that's not boding well for it. But like I said, you know, I have my stops. I have a time stop. I'm looking at
Valentine's Day, baby.
The Valentine's Day massacre or love from the natural gas market. We'll see.
Well, I'm wishing
but I think that's the way to trade it here.
I'm wishing you love, baby.
Thank you.
Hey, you know what is crazy, though? I tell you, folks, okay, is that this energy market, it's pretty intense. Like, oil is bad, but when I just looked at natural gas, it almost got cut in half since November 16th. That's like unbelievable.
Well, yeah. Well, oil's cut in half too.
Oh, yeah, I know, but that took 6 months.
I mean, these are brutal moves we're seeing. You know, it's like unbelievable here. You know, and I want to go back to gold for a minute because one of the interesting things. You know what I think the strongest case for gold is here?
What?
Zero interest rate environment.
I agree, man. I
mean, that's what it's all about here. For now, forget physical demand, forget all that. The fact that it costs nothing to carry gold bodes very well for it in 2015. And Tom, quite frankly, I can't see interest rates going up too much in the U.S. I just can't see it.
I don't see them going up at all. Now,
exactly.
And folks, what it has to do with, okay, you know, is that you hear the humdrum on a continual basis. Oh yeah, rates have to go up. Rates have to go up. It's like every time I hear that rates have to go up, all I keep doing is looking at Europe and I'm saying to myself, well, if rates are going to go up, let me tell you something. Europe's got to really go up because right now, in France, they're only paying 0.8% for a 10-year.
Are you kidding?
We're paying
rates in Europe are going down, Tom.
I know, I agree. I mean, big time. Now, check this out, folks. This is what I think is happening, and this is serious business, and this is a fundamental take. But in the food, even though, you know, Andy, this is interesting. So the commodities we know have got hit, right? Mm-hmm. And food's got hit, okay? Mm-hmm. But the bottom line is that food is wicked expensive, man. Food, I think inflation's raging in food right now. Every time I go to a supermarket, I go a lot, it's like, oh my God, man, it's always $100, $150. I mean, that's you know, and that's not a lot of food, man. You know, I can't picture what a family of 4, you know, trying to make, you know, ends meet, man. It's pretty intense.
Absolutely. 2 years down the road, we're going to not be talking about deflation. We're going to be talking about inflation.
Yeah, I can see it, man.
I mean, not in 2015. Not in 2015.
No.
There's too many problems in Europe and even Asia, you know, and in Japan. But hey, if they raise rates, Tom, then you're going to see spikes in the dollar.
Yeah, there's no doubt about that. But I mean, what are you going to do?
What are you going to do? Hold euros and put those on deposit or hold dollars? I'd rather you get both. You get a better interest rate and you get the upside appreciation.
Yeah. And you know, unfortunately, you know, what happened in France, folks, you can see that it's a mess.
Tragedy.
And, you know, that doesn't have to do with the weakness in Europe. But what you do have is you have additional problems that are compounding things and will continue to compound things. You know?
And absolutely. And you are going to see an increase in nationalistic type demonstrations and politicians elected because of these things. And, you know, that's going to this is weaken Europe, not just economically, in many different ways.
Yeah, there's no doubt. There's no doubt.
So it's, you know, that's why you know, where are you going to put your money here? The dollar is great. I mean, the dollar is really the strongest. It's the strongest. It's the best choice of all choices out there.
Yeah, and you know, hey, this is interesting.
That's why I'm so bullish on it.
What they've said a million times, folks, you hear this all the time, is that the dollar is strong by default. I don't buy that. It's not by default. what happens, folks, it is what it is, okay? We're in a world of it is what it is. Well, we're the best in the world. That's what it comes down to. It's like, okay, this is not a default position, okay? It's a, you know...
With all our problems here, with all our problems in the U.S., we are still the most stable and most prosperous economy.
Yeah. It's a good
so that's you know, and I think that's being reflected in the dollar. And I maintain what I said. I really think we're going to see dollar-euro parity much sooner than people think we will.
Well, that means that the Amalfi Coast, here we come.
Exactly. And you know what? Gold doesn't have to go down. It doesn't have to go down in this environment, because gold is also a fear trade. Look, gold's got to put under it until January 25th with this Greek election. All right. And then you're going to have elections in Spain, in Portugal. The Italian prime minister said that he's going to resign this year. So you might have big changes in governments in Southern Europe this year. And that doesn't bode well for the euro.
You know, my personal take, Andy, is that I think the Greeks are smart, man. I think they should tell the European Union to go take a hike, man. They already know it. They've already got all the bread. They have the land. They can sit on the islands and groove, man, and know nothing's going to change.
Well, how long has Greece been around, Tom?
It's not going away. Totally.
It's not going anywhere.
Totally, man. You know, and folks,
well, it's all accounting.
It is all accounting, and the last time, you know, basically, Germany saying that, you know, no, you can't go out, and, you know, then they say, yeah, you can go out. The bottom line is that that's the fear of God for Germany, that the Greeks will continue to have a good time. And they're going to. That's the bottom line. Why wouldn't you? People keep lending the money. They keep bailing them out, and it's like, hey, things are good.
Tourists will keep going there.
Totally.
They're beautiful places. These are beautiful. Italy, people are going to stop going to Italy.
No way.
By the way,
no way.
People are going to go to Italy with the lower euro.
Right. No doubt.
It's you know.
Hey, listen.
I think it's a no-brainer. Hey,
it's a beautiful thing, man. We'll have to have a tiger meeting, folks, in the Amalfi Coast, and then go to the Greek islands, maybe. Huh?
Sounds like a beautiful thing.
Have a great one, Andy. Look forward to the show at 5 o'clock.
Take care, Tom.
Okay. Don't forget, folks, 5 to 6 Eastern Standard Time right here at TFNN. You know, when we do look at the euro and the situation over there, folks, bottom line, it would be smart for basically the folks in Greece to turn around and say, you know, go take a hike. We're not doing it. You know, we'll see how that shakes out, but I don't think they're going to basically, the European Union is going to let that happen. If we go back to the S&Ps for a second, the E-minis right now, let's see, what do we have left in here? So you get 15 minutes. We'll see where they can get this baby. Right now we're 2054, and you don't, you know, there she is. There she is. And we don't, you know, you basically need, well, we'll see whether we can get it down 10 points from here. That's asking quite a bit, 10 points from here, I can tell you that. Inside the Dow Industrials, what we have, there wasn't one red stock inside the Dow Industrials. The leader out here was United Healthcare. That's up $4.70. DuPont is up $2. Microsoft is up $1.30. Pfizer is up 75 cents. Even the Laggett, which is Disney, is up 80 cents. Johnson & Johnson's up 65. Caterpillar, which has got croaked, is up 47, and you get McDonald's up 14 cents. Inside the NDX 100, what you have, the leaders out there is Avco Technologies. That's up 5%, $5. Citrix is up 251. You get NXPI up 337. Let's see, Cirrus Satellite is up 14 cents. Taking it away from it, even though the NDX 100 is certainly up pretty good, is that you got Alexa Pharmaceutical is down $4.56. You got Regeneron down $5. Biogen is off $2.98, and Amgen is down $61. If we go look at the IBB, this is a classic, folks. The IBB, okay, which is the biotech index. That little baby, let's put this on a daily first. Well, on an intraday basis, we right now are trading at 313. This can get down to a 311.66 in about a heartbeat. That's on the intraday basis. On the daily basis, what you have You got a test of the high with dramatically lighter volume. We're going to do, 127, that's 1.2 million out there today. You're going into 2 million. It's not going to be able to handle it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up 290. NASDAQ up 79. S&Ps are up 33. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 295. You get the S&Ps up 34. What it looks like we're going to have coming into this close, we get 9 minutes. You're going to end up with about 750 million on the NYSE. We take a look at the NASDAQ. What you're going to have inside the NASDAQ is about NASDAQ will do about 1.9, maybe 2 billion shares. So the NASDAQ, the move is, not bad. S&Ps, however, is just not there. If we take a look at the SPY inside that correlation, to look at that correlation of how we have gone down versus how you're going back up, you can see it's quite dramatic. Right now, the SPY has done 124 million shares. You came downtown on 209. You're going into the 132. So it still just basically doesn't even have a. And 132, the first time on the way down was pretty weak in itself. We take a look at now. What does have a little juice? If we go to the diamonds for a second. And this is the Dow. We came down on more. The diamonds came down on 10 million. Right now, you're going up on 6.8, and you're going into 4. So the diamonds are saying, guess what? That baby, right now you're at 178. That could hit the highs. The NDX 100, not even close. NDX 100. Today, thus far, we've done 35 million shares. You've come down on 68, actually, 67 million. The NDX just doesn't have it. And that high volume swing low is still out there. The benchmark out here still, folks, is the benchmark from the October 15th swing low. One of the high flyers out there that basically, can't hold a price right now is Google. So it's going to be interesting to see how Google shakes out. Google got to a low out here today of 495.02. We've done thus far 31 million shares, about 3.1 million shares. That was coming into 4.3 million, and that was at 497. Right now, you're trading at 506. So on the daily basis, you get a rejection of price today, down on price, but you get a rejection of that price, and you have lighter volume. What you're going to have, more than we'll see how this shakes out. But what you very well may have, though, is that we may have a higher volume weekly bar, because if this had broken and stayed under 497.19 today with more volume, you would have an ABC structure on the way down. Amazon, we go take a look at Amazon out here. What we have with Amazon, Amazon today is a dead cat bounce. So Amazon's trading at 299.76, and what is game here in a big way for Amazon is 284. So that's going to be interesting to see, okay, what is going to drive it down there. The energy stocks, they are doing a large ABC structure on the way down. What we have with energy is this. Energy, you get a nice dead cat bounce out here today. The XLE is trading at 76.92. You have that high volume swing low. This has already broken your October 15th swing low. The swing low that it's going to be going after once again is the December 16th swing low, where we did 57 million shares. So this move lower in the XLE large integrated oil stocks is not over. The XLF, the financials did come off that high, and I love how this chart is set up. What we have with the financials is this. The XLF today gapped higher. You did 28 million shares. That 28 million shares, you had come down with 48 million shares. You're up on 28. You're going into 41. That is building cause big time in order to get down to the $21 area, $21.55. So we have a consolidation that is no doubt at these highs. You get a trading range at these highs. We've come down twice with volume since the first high was made on December 8th, and we'll see where the rest of this is going to shake out. What is just amazing, there's no doubt, is that you have the market absolutely loving a strong dollar, you know, and it has gone continually, folks, on a tick-for-tick basis, meaning as the dollar goes higher, market likes higher dollar. Market goes, dollar goes lower, guess what? It's immediate, too. The market goes lower. What is no doubt the wild card out here right now is that the gold contract itself has not gone down with the dollar at highs. Actually, let's see, 2007. Yeah, it's at 6-year highs, the dollar. And it's like, okay, you know, why not? Well, we'll see how this shakes out. We do know that the price of gold coming out of the ground is only about $60 to $70 below where we are right now. You know, right now we have gold trading out here at the 1207. Bottom line is that it's a good 1150 to 1180 to get gold out of the ground, and that's all in, folks. What that specifically means is that you get it out of the ground, get it to the mill, and make sure that the mining operation gets covered over like it's supposed to get covered over and fix the environment. What does happen many times inside the gold market, inside the gold market, inside the financials, is that when you hear cash cost, that cash cost many times does not have the actual price of fixing the mine after you've taken it apart. And that's really important to understand, because that cash cost, because that has to be done, and that is not going to go back to the investors until that is done. You know, so we'll see where this whole thing is going to shake out. The battle between the dollar, gold, and the gold equities. S&Ps right now, we're at 2055. It's not going to come in with juice, but you are going to come in with price out here, no doubt about it. We take a look at the Big Blue. So Big Blue out of the Dow stocks is still a Dow stock that just can't handle higher price. Big Blue is trading at 158.37 out here today. She's still building cause to get into lower price. Until Big Blue gets on the other side, Big Blue would have to get on the other side of 161. So it's not that far up, but it'd have to get on the other side of 161.68 in order to get into higher price. You know, it's been trading below that area since the 20th of October. Prior to that, it had been building cause, big cause too, in order to get to lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And, of course, don't forget, it's Thursday. Our man, Mr. Andy Heck's going to be coming up right after my show. Dow Industrials up 312. We get the NASDAQ up 85. S&Ps are up 32. You stay right there, folks. We're coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials. Dow Industrials finished up 323. You had the Nasdaq up 85. S&P's up 34. Gold contract down $2.70, trading at $1,208 an ounce. Silver down 19 cents at $16.34 an ounce. Platinum flat at $1,218 an ounce. Light sweet crude $48.84. Crude can't move. The bond market, you had the 10-year down 10 ticks at 128.05. Light volume, 30-year off 1 point and 6 ticks at 146.30. And King Dollar up 455 ticks at 92.57. King Dollar is over the 92.53 2008 highs. 2005 highs, rather. Euro down 49 ticks at 117, and the yen is trading up 39 at 119.65. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY, folks. This is what you have. SPY closed out today at 205.90. We did volume out here of 140 million shares. We had come down with 200 million shares. Held price, however, so you holding price, that is saying that this SPY can get up into this 206.88 area. Bottom line, no juice behind the move even in the Dow Industrials. Dow Industrials, NYSE, we take a look at the NYSE. What we have with the NYSE, it was up 323 bucks. What I do expect you're going to have on a Friday, though, is that that'll go test that high up there. The high in the NYSE from the 26th was 18,103, and we're right next to it. We're at 19,077. We look at the NASDAQ composite. What do we have with the composite? Composite didn't have the juice inside it. Well, the composite wasn't bad. It was 2 billion shares out here inside the composite. We were at 4736, and I don't expect the composite will reach these highs out here. We came down to 2.4 billion. You're up on 2 billion. If we take a look at the NDX 100, the 3 Qs, what we have inside the 3 Qs is this. 3 Qs out here today, we did volume of 39 million shares. We had come down on 66 million shares, and you're going into the 36 million shares. The 3 Qs, folks, okay, have already... The first high in the 3 Qs was on November 28th. That high was generated at 106.25. You did 17 million shares. Then we came down hard on to December 17th. We did that with 79 million shares. We make another high with 17 million shares, and we come down again with 66 million shares. You can see what you have happening there. Inside the 3 Qs, folks, bottom line is that you're building big volume on the way down. We take a look at the Russell 2000. We use the IWM. The Russell 2000 is the weakest index out here. And what we have with the Russell is this. If we use the IWM. The IWM today did 20 million shares, 28 million shares. You had come down on 67 million. The high, we're trading at 118.71 right now, and I expect if you want to hear something that's really bizarre, so check this out. if the Russell had closed 1 penny lower, it would have been a failure on price and volume. It closed right at the 118.71. The 118.71 was where the Russell had gapped down. Okay, so on January 2nd, the Russell had closed at 118.93. Then what ends up happening, it gapped down that next day, and it gapped down, and it opened at 118.23. The high of the day was 118.71. Guess where we closed? 118.71. As one of the Tigers said, just for me, just to play with those Bears. And there's no doubt what I actually like, and when I saw this, folks, and this is how crazy, and this is how great the markets are, is that when I saw it close right at the tick, I'm saying to myself, man, you got to love it, because when large operators have their hands on it, which they do, there's no doubt about that. Bottom line, you just throw a couple ticks in there, because anyone that's, basically a technical trader, when you get bears and bulls that are technical traders, you know that that number is an important number, because you close at it, over it, guess what? You can go higher. Gold contract. What do we have with gold now? Here's the divergence, folks, and it's big divergence. Gold market out here, we closed out at 12.08. Really sweet how this shook out. What I mean specifically is this. We did 117,000 contracts. Pull back. That's a pullback with dramatically lighter volume. Yesterday, up at higher price, we did 190,000 contracts. The swing high that it's going after right now is 12.38, and we're 12.08. Up at that swing high, we have 241,000 contracts. So you're building cause for higher price inside the gold market. And with that said, and this is what is the divergence, King Dollar. What did King Dollar do? King Dollar, folks, got to a price point today of 92.76. You closed out at 92.57. That is over the 92.53 high that was generated in 2005. If we take a look at the UUP, now the UUP, folks, okay, is the Power Shares Dollar Index. Well, first off, I think the dollar's topping out. That's the bottom line. Why? Because you have that context that gold should be getting smoked, folks, with the dollar at highs. Bottom line, it's not. So you have an accumulation that's happening here. If I take a look at the UUP, which is the U.S. Power Shares, you can see it quite clearly that the last time that, well, we're at highs and with dramatically lighter volume. So now you have distribution that's happening inside the UUP, and I can make a case that UUP right now is trading at 24.49, and I suspect what you're going to see, the UUP wants to pull back somewhere about the 23.35 area. Now that's the UUP is something that moves very slowly. Bottom line, though, we'll see where this shakes out. But the divergence is there, and it's there absolutely in spades. We take a look at the bond market. What we had with bonds is this. The 10-year, first off, we take a look at what we have with the 10-year is that she pulled back with light volume. Yesterday we're up at highs with 1.7 million contracts. Today you pull back with 1.4 million. The 10-year and the 30-year want dramatically higher price, folks. It's going to be wild watching this whole thing shake out, because what we do have is that the yield on the 10-year right now is at 2. The 30-year, we take a look at the 30-year. 30-year today pulled back 1 point and 8 ticks. And what we did is this. Yesterday you were up at highs. We did 576,000 contracts. Today, you pull back. We do 415,000 contracts. Now, it certainly can pull back a little bit more, but both the 10-year and the 30-year want higher price, and my take is that it's not only just higher price, folks, it's actually dramatically higher price. If we go look at the diamonds, the DIA, what I do expect, the Dow Industrials want to basically hit a high. The diamonds out here today, the ETF structure, that did 7 million shares. Your high up here, we closed out at 178.76. The high is 180.49. That high had 19 million, 1.9 million shares. We're doing 7.1. We did come down on 12 million, but how we're coming into this bar, we basically got into that bar pretty good. So you get into a bar like that with decent volume, that says that, guess what, you want to get up into that high. Now, oil market, folks, continues to basically be flat. Oil wants dramatically lower price, as does the, first we'll look at oil. What you have with oil out here is this. Crude oil today, $48.91. This little baby longer term wants to get into this 36 area. So 32. It wants to test the swing lows of 2008. You stay right there, folks. Dow Industrials finished up 323, NASDAQ up 85, S&P's up 35. Coming back with our man, Mr. Steve Rhodes. We're going to be growling and prowling out here. You stay right there, folks. Coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Now, listen, folks, each and every trading day, we start off TFNN 8 o'clock in the morning, 8 to 6 every day. Our man, Mr. Steve Rhodes, does an outstanding program from 9 to 11 every trading day. And he also put together, folks, a trading program. It's a phenomenal program. It's a 7-week trading program. Inside that program, so this is the second webinar inside this program. Tomorrow morning, Steve's going to be doing a webinar for his subscribers inside that, but it's not too late, folks. You can come over to our website at TFNN. You can register, and I'm going to let our man, Mr. Steve Rhodes, tell us exactly what it's all about, because this is just not a newsletter. This is a methodology to understand how you should be looking at the marketplace, folks. Steve Rhodes, what's going on?
And what a methodology it is.
It's a beautiful thing. So tell us how this program works, Steve.
Well, you know, it's when we took a look at how can we best benefit the TFNN family, it was about doing more than just trying to do something just a little bit different.
Sure.
And that little bit different was, over a period of time, so that what was taught during, let's say, the first workshop,
right?
For the following 6 weeks, I followed up specifically with one specific instrument, as well as other trades, other possible instruments that people could have traded out there. So the first workshop, actually, and this is kind of the cool thing. Before I came on the air, I just wanted to do a quick summary of where we started and where we're at.
And you can still get the first archive. That's the key here, folks. Okay, one of the keys. Right.
Absolutely. So if folks are looking to be able to learn about some of the patterns, successful patterns that we talk about on the air, then this is something that they want to sign up for, and they've got access to it, as you say, on their members page for the next 30 days. As well as direct access to me to answer questions. We started this on a Saturday, so that's a little bit unusual. So we did it Saturday, November 22nd. Now, the S&P futures on that day were trading at 2,054.50. Right now,
that's crazy. Oh my God!
right now they're trading at 2,054.50.
Wow! So, what are the odds of that, man? That's
exactly. Now, as part of the workshop, one of our outcomes is to be able to take these patterns and be able to help folks make money.
Sure.
You'd like to be able to pay for the workshop. Okay, done. We can check that off the list. If anybody would have followed the exact trades that I gave them ahead of time, they would have on just a $10,000 account. So this is not something where you needed a ton of money, but on a $10,000 account, you made $1,100.
Okay.
That's
good scene. Yeah.
Yeah, it's 11-12%, in a 6-week, 7-week period of time. Now, tomorrow's workshop is going to be to unveil everything that we didn't get to during that first 3 hours, and all of the trades associated on this exact same time frame would have generated $14,000 in profit, not the $1,100 in profit. So that's a pretty cool thing.
That's pretty intense, no doubt.
Yeah. So what it was is it was trading the ES Mini, but people could trade the other instruments.
Sure.
But where we're basically flatline, started at 2,054.50. Right now we're 2,054.50. We picked up 287 points versus 0.
Right.
In a market that's gone up and down. So it's really going to be teaching folks, we don't get enough. I mean, we do the radio shows a couple hours a day, but there's so much going on. This is really the opportunity for me, in my case, once a year to be able to do to share the best of the best. It's like going to Top Gun training, if you were a pilot, where we're going to just simply teach the absolute best patterns. And the beauty is that I'm there to help folks truly understand the techniques that are out there, and anybody can do it. That's the cool thing. I can teach anybody how to do this because, my focus is really always trying to be able to link the known to the unknown, to be able to look. It took me, I figured, 12,000 hours or so to figure all this stuff out.
Yes.
But I can condense that into the 6-hour workshop that in essence that we're doing.
Yeah, and what happens, folks, is this: you can come over to our website at TFNN. The course is $395. You'll get the archive. You can do it right now. You can listen to the archive right now. Steve's going to be doing the webinar tomorrow. But tell them about you have a follow-up every single week also.
Yeah, I followed up every single week. So there's other collateral material to go with it. They get all the slides. So I give them the power slides so that it's really, and those power slides are things that you would paste up on your wall that you would look at when you're asking yourself, hey, what's the market doing right now? What should I do?
Right.
All you have to do is look right over that slide and say, well, let me get rid of all the noise. Let me quiet my mind. And this is what I do. This is why I take the action that I take. You know, whether it's adjusting a stop, whether it's getting into the trade, just simply trading what is in front of you. And for those folks that are working tomorrow or they're too busy, that's okay, because again, tomorrow's workshop is archived out there, and you may have, if you're going through the archives, as many people did, and you have questions, you know, I give people my email, my cell phone, my Skype address. I mean, whatever it takes in order for me to be able to help people understand the pattern that's out there.
Right. And folks, you have a trader's market out here right now. You know, just as Steve said, 6 weeks ago, the S&P was at 2054.
Yeah.
Bottom line, you've had the price spread out here. We've been as low as, 48, as high as 57.
Yeah.
You know, so you're talking about some real action. Actually, further than that, huh? No.
Well, what's really nice is that, hey, you know, when you start these workshops, and especially in this case here, where I was following a specific instrument, a specific time frame, you're not really sure how many trades are going to actually fire off for you to be able to take.
Right.
But the market delivered, which was a beautiful thing.
Yeah, that is.
And then not just that, it was, you know, went through a workshop on a Saturday, showed folks, you know, historically, you know, on the left-hand side of the chart, what is it that we should do?
Okay.
And then when you're able to apply that, you know, live and what's going on, because not only did I do a 1-week follow-up, if there was a specific trade set up or an adjustment, I would send out an update to those folks as well. So look, for any of you that are listening that want to understand the A to B equals CD pattern, I mean, really understand it, understand the secrets and the nuances, then this is the workshop that you want to attend. If you want to understand how the market communicates to us, and there's only one way that it does it, and it's through Japanese candlesticks, where the bulls and the bears have to leave signs for us. Then I get rid of the 16 or 17 candlesticks that most folks might pay attention to, and we get rid of the noise. We just help people to identify what it is that they need to focus on. And then there's a number of other simple secrets out there that I share with folks during the during the 6 hours.
And folks, you can come right to the front page of TFNN. You're going to see it right in the carousel. You can sign up right now. And, of course, the markets are open tomorrow. So what you have is this, is that and you do want to listen to the first one, which is archived on your page, because the first one is going to give you the full methodology. The markets are going to be open tomorrow. Steve's going to follow up in the methodology, of course, but you have the markets fluid and they're moving, which is just dynamite. So it's really cool how you get both aspects of it.
Absolutely.
Okay, well, listen, man, you have a great night, a safe night, and, of course, we look forward to the workshop tomorrow.
All righty. You be safe tonight.
Okay, man. Have a great one. Have a... You do, folks, you come right back over to our website at TFNN. When you hit it, the carousel, you're going to see it's right there. You can register for $3.95. We're talking about, Steve's going to be talking about those reversal patterns. He's going to be talking about when you should be pulling the trigger. He's going to be talking about the momentum pattern. And what you also get is 6 follow-ups, okay? Each will be delivered to your desktop, on those Monday mornings. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials finished up 323. Nasdaq up 85. S&P's up 35. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at Bed Bath & Beyond. Bed Bath & Beyond, folks, closed at $79.45. And this little baby, this is, it looks like you're talking about getting it smoked, toasted, and roasted. This thing is down $5. Well, $4.50 right now. It's trading out at a $75.41. Let's see what they're saying out here, Bed Bath & Beyond. So let's see what it looks like. So Bed Bath & Beyond. Okay, net sales. So the top line is the shot too. The net sales were up 2.7%. Net sales were $2.9 billion. They were looking for $2.97 billion. So the top line is a little light. Bottom line also was light. They looked to be making $509. They made $505. Now, when we do take a look at this, what you do have is this. This has been on quite a run. If we take a look at a 6-month run, you're talking about from 57. Let's go take a look at this. So we take a look at this on a weekly basis first. And, oh, look what it did. Oh, interesting. Okay, so check this out. Oh, this is pretty intense, folks. So I have this on a weekly right now. And what you're going to see is that January of 2014, we had a high. Oh man, this blows my mind when this happens. Okay, so we had a high of 80.70. We had volume there of 3.1 million. That's on the weekly. What we have out here right now, thus far, we did 1.7 million. Let's see. No, how? Let me just look at this for a second. I believe what's happening. 1 second. So we had. Yeah, 31 million. So 31 million versus 17 thus far. That's how this is shaking out. We came down with 31 million. Thus far, we're up at 17 million. That was a weekly I'm looking at. Okay, so what you're going to have there is this. You're not going to do the volume. You have a failure now at the highs. And what that sets up, okay, this is going to be wild watching this shake out, because what that sets up is that you can come all the way down to 67.57. That's how that's set up right now. This is a classic too, folks. I'm telling you. When you're coming into a high volume bar, and we just about made it. That's what's amazing. We made $79.69 today. Today it went up there, okay? And the high of that bar was 80.70. But it did not have the juice. It just absolutely did not have the juice. Now, that's on the weekly. If we bring this back that far, just on the daily, and we take a look at this daily, let's take a look and see where that shook out. Oh, man, that's nasty. So what you have there is this, is that on the daily, bring this back. Okay, so I got to bring this into a daily and bring this back for you. Whoops. Bottom line is they didn't have it on the daily either. The daily, we had come down, folks, on 17 million shares. So bottom line is that what you're going to see is that we're going to see lower prices out here, fast and furious. Let's see what they're saying about these sales. They're saying, let's see. They see fourth quarter earnings per share of 178 to 183. The estimate was 181. They're looking for 2.8% to 3% growth. Their comp sales are 1.7. The estimate was 1.8. So that's going to be a problem. If we go over to the financials, folks, the XLF. XLF is something you want to keep your head wrapped around. The reason being is this. The XLF came down on some good juice. And the banks themselves, folks, what you have is this, is that the banks, until the banks really fall apart, and they're the last sectors that normally fall apart, that's when you'll see this market, go south and go south very quickly. The XLF is basically saying out here today that it's close. That why the XLF went up today, and we went up with 30 million shares. You're going into 40 million. We had come down with 48 million, and it's trying to get into a swing low that was generated out there with another 36 million. So that little baby has some juice on the way down. Now, inside the NASDAQ, it's all about the IBB. And what you had is this, is that the IBB today it's trying to test the high. The high that was generated on the 19th of December had 2 million shares. Today we did 1.4 million, couldn't hold that high. We have a high volume swing low out there at 292, and we're at 314. What that's setting up, I suspect, is that that's setting up that it wants lower price, and that's where all the volume is. What we have inside the Dow Industrials. Now, the Dow Industrials, folks, the way that the Dow is set up, there wasn't an equity inside the Dow that was in a negative situation out here today. If we go take a look at even Caterpillar. Now, Caterpillar had got absolutely toasted and roasted. Caterpillar has come off a high of $107. It's trading out at 88. It's absolutely a dead cat bounce. What we did out here today is that you bounced out here today, and we did 7.5 million after coming down with 11 million. Caterpillar is off that high of 110. Big number. One of the leaders inside the Dow Industrials today was 3M. We take a look at 3M. What you had with 3M more than likely, 3M hasn't got toasted at all yet, really. You know, 3M is off a high of 168 or 163. 3M probably is going to try to test the 166. Microsoft, which has been a performer out there, is in a consolidation. Microsoft, I don't expect is going to get into higher highs. The big drag on the Dow, and will continue to be the drag on the Dow, is this Big Blue. Big Blue, folks, okay, just can't handle higher price in a big way. We're right. Big Blue right now is at 158.42, and what I expect you're going to see here, you know, she can try to go after the 166.69. Coming into a Friday, what we are going to have is that I suspect the volatility is going to continue. What is going to be really interesting here is to see what happens inside the NDX 100 tomorrow morning. The reason being is that what you do have is this, is that Bed Bath & Beyond, you got to remember something. The NASDAQ 100, the composite, is a modified weighting structure. And inside it, the Best Buy, okay, has some decent weight inside that structure. So we'll see if, in fact, it basically puts some selling pressure on it. Right now, Best Buy closed at the $79 and let's see, BBBY. She closed at $79.49. And you can see from this red bar on my chart, that's pretty intense as it is. You talk about taking out some days of trading. We're at 74.80 right now, and it will be all about one of the largest weighting structures inside the IBB is BIIB. That's Biogen. So what we have with Biogen out here today is this, because it's going to be about the biotechs in general. What Biogen has done is this. Biogen almost got to its high out here of 361. It traded up to 360 and then gave it up in price. Now, the way Biogen traded today, however, is that high can get tested again. The reason being is that we did 4.2 million. And that's basically pretty good. So I suspect that's going to get tested again. If we take a look at Amgen, the way that Amgen was trading out here, Amgen wants lower price. You know, Amgen is off its high of 173. You're trading at 157. That looks like a larger ABC structure on the way down. Regeneron, R-E-G-N, this is one of the high volatility stocks inside the IBB. That high is 437. You're trading at 403. That also wants lower price. Celgene went up today, lighter volume. Celgene is a tricky little character out here. Celgene is at 115, and That's kind of right where it's 115.46 on Celgene, and right now it's at 115.05. Celgene also, though, wants that lower price. So this is going to be wild watching this whole baby shake out. And what I do expect, what you're going to see out here, and it's tomorrow too, you get the jobs number that's coming out tomorrow. You know, we'll see where that shakes and bakes. What I do expect you're going to see out of there, the jobs number is going to basically shake the market around a bit. It's going to bring bonds up, going to bring markets down, and bring gold up. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming back next to us, growling and prowling with us. Dow Industrials finished up 323. NASDAQ up 85. S&P's up 35. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Now let's go over to our man, Mr. Basil Chapman. And don't forget, folks, every trading day, 10 to 11 Eastern Standard Time, Basil has an outstanding program right here at TFNN. Basil also has a great newsletter. It's the opening call. The way you get it, you come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You can test drive the opening call right here, right now, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Oh, you're sounding good, man. That's good.
Yeah, thank you.
That's good.
And boy, has it been cold. Wow.
It's my daughter sent me a picture of the thermometer this morning, and in Boston, folks, it gets cold, but not as cold as it is right now. I have a picture of -2 when she woke up this morning, right?
And that didn't show the wind chill factor.
No. That's intense.
Was very cold.
That's intense. So is it like 10 or 15 now?
No, it's so-called warmed up.
That's
yeah,
good.
it's about 10, 15.
Nice. So what are we going to look at, Basil?
So I'm showing you, as I always do, I'm showing you the Dow chart. And what's really interesting about this, and I said this to my subscribers this morning, one of the reasons why we had to kind of scurry and quickly turn around from the short side to the long side was when you're looking at the candles of yesterday and today, you will see that there's quite a close comparison to the December 17th and 18th candles, when on the 16th the Dow at 17,067. After it had made that high back, it was on the 5th of December, and it came down from 17,991 to that 17,067 level. And then it had two huge candles. And what I said to subscribers is if we're able to pierce, it didn't seem like it very early this morning, but then the futures were up quite strongly. And I said, if we were able to pierce the 17,000 at that point was about 17,720, I think. The 9-period exponential moving average, that's that maroon line there.
Yes.
That would be very positive because it would start to match other takeoff phases. And I'm just going to quickly scan this to the left, and you'll see back on the 15th of October, we had a big turnaround. You started to get these candles, and if I keep scanning back, you'll see that most of the takeoffs were immediate. There was very little pullback, and what I'm anticipating, if this is going to be the case, that we have, in fact, a very strong takeoff period. And if you remember when we spoke last, what I had said is my anticipation was, based on the weekly charts, was that the daily was about to pull back. I didn't expect it to break the 17,600, but it just did for a few days, and now it's gone back above into that 17,900, 18,000 area. But if my analysis of the weekly chart was correct, and I'm just going to jump over now to the weekly chart, this weekly chart says a couple of things. There was a trend line from the 15,855 low, that was the October 15th low, that went to the low of December the 19th at 17,067, and we just undercut it. But look where we've closed. I'm going to expand this so that viewers can see. And I must say, your technology is just terrific to be able to look at these charts. So here live on Tiger TV, what we're looking at is, at this point, Thursday, after the close at 4 o'clock, the Dow shows that it is closed above the 9-period exponential moving average, which is at 17,724. Now, what's interesting interesting is that my thesis has been that we aren't going to go skyrocketing in this phase. We're just going to make nominal new highs somewhere around above 18,103, maybe 18,250, 18,350, somewhere in that area. That's what I'm thinking right now, or at least above the previous high to make leg D. But the S&P, because in the Chapman wave, what you want is to go to at least a peak D before you get a substantial pullback. The S&P is only at B, so it still has to go to a C, then pull back and make a D. So we've got a rotational market, and that was demonstrated very well today, where you've got groups like the autos coming alive. The banks were okay, but you were talking about it, they weren't great. And the IBB, the biotechs, the favorites that were the favorites, even BBBY, which you just spoke about, Bed Bath & Beyond, has been a fantastic stock. I'm starting to see a kind of a rollover in those stocks that were fabulous, and at least in this particular phase in mid-January, going into mid-January, maybe the third week of January, slightly higher highs to all-time highs in the Dow and the S&P, and at some point later in the month, we get a very sharp pullback. That pullback, I think, will be something like a double-digit pullback, not the 4% that we just had. So I'm still positive. It's very selective. We went long. We added a stock today that we've been wanting to get for a while. We just bought it today.
Okay.
We've got a stock that's very interesting. We're still trying to hold. It's getting harder to hold the very longer-term positions, but we've still got Rite Aid, which is up 40% at 7.85, and the weekly chart is still very strong. So I think this is very selective. And as we move into next week, I'm expecting that tomorrow we could see either a doji-type candle, small candle, or a slightly down day. Monday or Tuesday has to be strong if it's going to continue to match the pattern that I'm looking at here based on the Chapman wave methodology, which takes you to a test of the old high of 18,103 sometime next week. So far, I think it's acting quite well. But as I say, very selective. You spoke about the Dow stocks. They are not, GE, my Dow Quartet, GE is acting, this is not very good at all.
Okay.
IBM, not a great chart.
Well, the IBM's been a dog for a couple of years, though, right?
It has. And Triple M is acting okay, not great, but it has been one of the better ones. We're going to see if it's able to make a new high above 168.18. And UTX, the fourth one in the group, is acting same as Triple M. It's acting well, but we'll have to see how it tests the previous high. So this is going to be a very interesting week coming up. And as I say, I think it's selective. The dollar I've got in leg C in the daily.
Yeah, that's interesting, isn't it?
Yeah,
I heard that Wednesday on your program. Yeah.
Yeah, I'm real close to some kind of a leg D, and that'll probably correspond to a nice balance, maybe in crude oil. The bonds TLT is already pulling back some. So I think we're coming in for a very choppy period, and that's going to be a very interesting market.
And listen, folks, you can come over to our website at TFNN. You go into newsletters. You go into trading newsletters. You'll see the opening call right there. You can test drive it absolutely free right here, right now. It's a great newsletter. Comes out every day. And, of course, Basil's on 10 to 11 Eastern Standard Time, 11 to 12 Eastern Standard Time right here at TFNN. Great show. Basil, you have a great night, safe night. Stay warm, no doubt.
Yes.
And cooking, brother. Have a great one, man.
Thank you very much, Tom. Speak to you soon.
Absolutely. Thanks for being here, folks. You stay right there. We got our man, Mr. Andy Hecht. He's going to be coming up, growling a problem with you with the commodity rundown. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Dive into it. Grab it. Everything you need is right inside you, folks. Look forward to speaking to it right here tomorrow. Go get them, folks.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
This is TFNN.